I'll whistle through everything if that's okay then. And please, if there's any questions at any point, just put your hand up or pop in the chat box and I'll try and answer them as we go through. So just to sort of start really as an intro, the reason I work in investor readiness and fundraising is because access to finance is still a real issue for SMEs and businesses across the UK. And that's because founders like you don't have the time or the resource to focus on that sort of fundraising activity to be able to raise external finance. There's a lot of work involved. And also the funding landscape changes all the time. So it's really hard to keep a track of who's providing what funding and what appetite that they have. So it's really difficult to navigate through that landscape. So I think investor ready support is really, really important. I know you've had other sessions during this month from different finance providers. So hopefully this will really help you, this month of activity and education, help sort of guide you through the different funding options and help you prepare when you're looking to raise external finance. So if we can go to the next slide, please, Siwan, I'll just run through what I'd like to cover today. So I thought I might cover bootstrapping, but that may not be so relevant today, but I'll just touch upon that just to kick us off. Then I was going to look at how to prepare your business for investment, look at different funding options and sources of investment, how to prepare investor-ready documentation, and then look at how to make a real impact when you're pitching for investment. So that's what I'm hoping to cover. But as I say, really happy to sort of tweak that and answer any questions as we go through. Just going to check the chat box. David, raise money from different companies. Specific issue is Wales is hitting an innovation cliff. Okay, yeah, no, we can touch upon that. That's no problem at all. So in terms of bootstrapping, so you may not have your own cash to invest in the business, or maybe you've maxed out in terms of investing your own money and you're reluctant to take on external finance. So bootstrapping is an option for some businesses. It works quite well for consumer-based businesses. So if you want to build a following on social media, use your audience to gauge where there's appetite for the product. So, really what you need to get is that first customer, and you need to validate that customer demand. So, do what you can using social media and building that following to get that customer validation, if you like. And then once you have enough media followers, use social media as a tool to advertise and to start to sell. So try to sell your value before you create it. You'll notice through this presentation, I have references to various lovely food and drink companies across Wales. I'm a bit of a foodie, so forgive me if you're feeling hungry. It may be some examples that'll make your mouth water. So 2 examples there, Hills, Brecon and Tea Melon Bakery. You may have heard of them. Please put in the chat box if you have, because really good to share tips on these foodie establishments across Wales. So both did a really great job of surviving during lockdown, and what they did was sort of put their products out to sell on the Monday, get all the money in, get the orders in, and then they knew how much they needed to produce during that week and delivery on the Friday. So selling that value before you create it is one way, of overcoming that sort of cash need, if you like. The other thing is to look at what you can get for free. So things like business cards, websites, branding, there's lots of different tools to be able to get that for free. Things like Weebly.com and Shopify, check these websites out if you do want to build a website or get some branding done. You can access these tools and try to save costs in that way as well. Also, the power of networking is really important. So, young businesses, please make the most of LinkedIn and networking events, mingle with your fellow businesses on the Accelerator program. These are really valuable contacts and networks to utilize. You can maybe swap services or swap expertise between different groups. So it's really important to build on that power of networking. When it comes to staff, there's some things like the Kickstarter program, the government scheme where you can get 6-month job placements for young people. So you can access some roles, if you've got some roles advertised, you can source some of these individuals without paying a huge amount. Some of the universities also look to undertake some research. So if you want a research project undertaken, connect up with your local universities and they may be able to help you out for free. Then the other option, we'll go on to crowdfunding in a little bit more detail later, but things like Kickstarter and Indiegogo, these are ways that people can pledge money to support your business or your project, and they'll release the cash once you hit the target. So again, a way of generating that cash before you really need to undertake any significant costs. So just check out those options really. So then next slide, Siobhan, if that's okay. In terms of preparing your business for investment, so if you do seek funding from an external provider, so you've done invested your own money, you've maybe bootstrapped a little, but you do need that additional cash then from an external provider, it's really important to prepare the business for investment. You really need to be clear on how much you need, because it takes quite significant time to raise finance. So you really need to be prepared. So the next step is to prepare the business for the fundraise and understand who will fund you, as there's a range of different finance options available depending on the stage your business is at. So I won't spend a huge amount of time on this. It's quite common sense, really, but make sure your internal process is in place before you raise external investment. So make sure your systems are in place. Do they support your future growth? Make sure your financial processes are robust. So, you know, if you don't have the skills in-house, maybe talk to an accountant to help you prepare management accounts. Make sure you keep an eye on costs and revenue on a monthly basis, and obviously the profit line as well. Ask an accountant to help you with forecasting. So obviously you'll need an idea of how your revenue will grow over time before you can go out and raise external finance. Make sure your operations manuals and sales and marketing plans are updated. And secondly, make sure those key fundraising documents are really impressive and really robust and professional. So things like your exec summary, your pitch deck, and your business plan. And I'm sure you can get help through AGP on that, if not already. But there's lots of different templates you can use, and happy to send some across to you if that's of interest after the call. The third thing to mention is SEIS and EIS. If we can go on to the next slide, please, Siobhan. So you may have covered this in previous sessions. I'm not sure if you have, but definitely worth considering these, as these are government tax efficient schemes. And by looking into these schemes on the gov.uk website, you can get a feel for whether your businesses qualify under the either SEIS or EIS schemes. And these can make your company really attractive to investors if you're looking to raise equity finance. So there's a bit of information there on the screen about SEIS and EIS, and do check out the gov.uk website if you want more information on this. But basically, if I just touch upon the SEIS side of things, you can raise a maximum of 150,000 through this scheme. It's if you're raising equity, that is. And in return, an investor would receive a 50% tax relief. So it makes it really tax efficient for that investor. So for example, if you're raising angel investment from a business angel, they would invest up to £100,000 per annum and receive 50% tax relief on that investment. So you can see how it makes it really tax efficient for that investor. You can see the criteria there. So less than 2 years trading history, less than 25 employees, less than 200k in gross assets, and active in a qualifying trade. So, you know, most businesses would qualify for that, you know, if they meet those key criteria. So just look into that if you are looking to go down the early stage equity investment route. And the EIS is the next stage on from the SEIS scheme. So you can raise more per annum. The tax relief is slightly lower, but still a really attractive scheme from an equity investor's point of view. So it's worth checking that out before you go on to raise external finance. Okay, so that's sort of the background. I'm now going to go in to talk about the funding options and the different sources of funding available to you, depending on what stage the company is at. Sorry, Jeff, I'm just looking at your question. What's the definition of trading? Active or actually taking in money? I would imagine, Jeff, it's revenue generating, but it's worth checking out the government HMRC website just to check on that. because their definition maybe it's more specific, but I would imagine it's revenue generating in terms of that trading side of things. So yeah, check that out on the government website, but should be the case. Okay, so I mentioned before, it can be quite confusing in terms of the funding landscape to know who to approach, depending on what sector you're in, depending on what stage the business is at. So I'm trying to map that out slightly for you to make it a little easier, if you like. So there's different stages of a business's life cycle there. So as you go through concept to pre-product to pre-revenue to revenue generating, there's different sources of funding to consider, and I'll go through each of these in turn, and please do shout out if you've got any questions at all. I will focus on the first three, the concept, pre-product and pre-revenue, as I would imagine that's where the majority of you fall in, but please correct me if I'm wrong. If there's anything more specific that you want me to address, then I'm happy to do that. So next slide, please, Siwan. Okay, so when starting a business, so in that sort of what did I call it, the concept stage, these are some sources of finance that you can consider. So friends and family, I'm sure some of you have already invested your own funds, or maybe you've got some family and friends to support you just in those initial stages to get that concept, get the idea into fruition and start developing that market viable product. So that's one source of funding. You may have a second job, you may still be working and running this business on the side, so you may have income from other jobs that you could invest. You could consider something like the startup loan. So this is a British Business Bank programme actually that's delivered via Business in Focus in Wales, and it's an unsecured loan of between £500 and £25,000 per director of the business. It's quite a good way to just get that initial startup capital. It's got a fixed interest rate. So I think it's currently 6% interest rate. And the repayment is up to 5 years, I think. And with that, you get some mentoring support, and there's various open university courses that really, really educational and informative. So that is, one option that you could consider when starting out in your business. The other is to look at the Prince's Trust. I don't know if there's any young people here, but Prince's Trust is a youth charity, and they do run various entrepreneurship programs. So this specifically is education and support for young people. I think it's up to 30 years old. So it's worth checking out Prince's Trust as a source of potential funding support, but also educational support as well. And there may be local initiatives, so check out your local council website. They have various pots of funding, maybe some grants that's available for entrepreneurs within those regions. So it's worth checking out sort of local council initiatives as well. If we go on to the next slide, I'm going to just touch upon grant funding. Grant funding is fantastic if you can secure it. It's money you don't have to give back, and you don't have to surrender equity. So you don't have to give away a shareholding of the business. The cons of grant funding is that, most schemes may not suit you. So they're usually quite specific. They're usually maybe supporting a particular innovation or a particular sector, or they need you to create certain number of jobs over time. So they're usually quite particular. So it's worth checking the small print. They can be quite bureaucratic, so it takes time to apply for these things and quite a lot of effort. So just allow enough time if you are going down that route. And typically it's only available for future activities rather than past ones. So just be wary of that when you're looking to secure a grant. So for example, they may want you to create 10 jobs in the next 24 months or something like that. So rather than historic activities. So just be mindful of that. But there's various sources of grant funding in Wales. So Smart Cymru is part of Welsh Government. They can help you to develop and commercialise new products and processes. They fund feasibility studies and experiments, so it's worth checking out Smart Cymru's website. Then you also have Innovate UK, so that's a central government initiative to support research and innovation. They have calls for action quite regularly, so just keep an eye out for that. Maybe follow them on Twitter, and they'll announce their calls for action. Again, usually quite specific around certain sectors or certain types of innovation, but certainly worth following them to see what they have coming up in terms of open activities for application. There's various other grants available. So there's the Barriers to Startup grant you may have heard of. It's only small, I think it's £2,000 available, and that's to help individuals overcome barriers. So it's usually for those in underrepresented groups. So that may be relevant to some, and it's worth exploring because every little counts, even if it is only £2,000. Next, I'll go on to talking about crowdfunding. Siwan, if you don't mind flicking on, that's great. Fab, thank you. So I'm sure most of you have heard of crowdfunding. It's when a group of individuals come together and provide finance for a startup or early stage business or project. I think you've got somebody coming to talk to you specifically about crowdfunding later on in the month.
That's right.
Yeah, so that'll be really useful, I think, for you to understand, their needs and the benefits of using crowdfunding in a bit more detail. But really, they showcase the business on their platform. They typically raise smaller amounts of funding, usually between 10,000 and 2 million. And they do expect you to bring some funding to the table, usually about 30%. So you'd maybe raise some funding from a business angel and then go onto their platform to raise the remaining amount. It works quite nicely for consumer brands, so B2C, business to consumer brands, or fan or membership based propositions. And there's different types of crowdfunding platforms. So there's debt crowdfunding, and there's examples of them there in the chart. There's investment or equity crowdfunding, which Seedrs and Crowdcube are quite well known for. And also there's the rewards type of crowdfunding. So Kickstarter and Indiegogo are examples of that. And really the pros of crowdfunding, it can be quite quick. So you can secure investment quite quickly if you are successful on the platform. It's a good marketing tool. So they do promote the business quite widely on their platform. So it can work really nicely to build your brand via that route. They use quite standardized documents, so the legalities are usually relatively straightforward because they're standard documents. And usually from a company's point of view, the valuations are quite high, and I'll touch upon an example of that shortly, just to evidence that really. So from a company's point of view, the valuations are quite high, which is great. So you can give away less equity for the funding that you receive. In terms of the cons, there's usually quite a large number of investors, and I'll go on to share some examples shortly. So you could have a lot of different stakeholders to manage, so that's one thing to be aware of. It can be relatively expensive, so I think Seedrs usually charge a 7.5% fee, but that's only if you're successful. So if you're raising £300,000 and you manage to raise that on their platform, they will take a cut of 7.5% of that. So make sure you build that into your fundraising plans. And also the other con is from an investor point of view, the valuations are quite high. So they would get less of a shareholding for their investment. So just be aware of that. So there's been quite successful Welsh businesses who have funded through this route. So you may have heard of Brushbox, that's an oral health subscription box. So they successfully raised £730,000 from 275 investors on Crowdcube. So that's when I mentioned a large number of investors. So Brushbox had 275 people pledge money to their business. So be interesting to hear. I don't actually know how they manage that in terms of the volume of investors, but it's just worth bearing that in mind, really. Dusty Knuckle Pizza, again, my foodie coming out there, but they raised successfully on Kickstarter. So in terms of that reward element, the way that they offered it was people could pledge however much money, maybe £50, and in return they would get, I don't know, pizza, free pizza every month for a whole year, or they had a plaque on the new Dusty Knuckle restaurant or something like that. That's what a reward-based platform means. So they raised £43,000 to bring their new pizza restaurant to life. And they had 684 backers, so a huge number of backers for that business. And the other successful Welsh business who's raised through crowdfunding is Drop Bear Beer, which you may have heard of. So they secured £1.8 million in equity, not only from Crowdcube, but also from a business angel in Wales called Henry Engelhardt, who you may have heard of. So they secured 300,000 through Crowdcube to start opening and building their manufacturing site for alcohol-free beer. So really interesting case studies there, businesses who have really successfully raised through crowdfunding sites. I'm just going to check the chat box if there's anything else. Okay, no, I think that's okay with everybody. Any questions at that stage, or shall I flick on to the next slide? I assume that's all okay. So next, I wanted to talk to you a bit about early stage equity. So you will have heard of business angels and early stage funds, I'm sure. So think of Dragon's Den. These are private investors who invest their own money into startup and early stage businesses. So they either invest on their own or they syndicate as a group so that they can invest more together as a club. So they are called business angel networks. They typically invest between £10,000 and £300,000, or they can syndicate and invest larger chunks, potentially up to £2 million. They're usually hands-on investors with experience. So as you will have seen from Dragon's Den, they'll have built their own businesses, they'll have their own networks, they'll be able to add value to your board by opening doors or making suggestions on your strategy. So they usually are quite hands-on when it comes to you growing your businesses and provide some really useful contacts as well. So in Wales, the most prominent angel group is called Angels Invest Wales. And I think you're having an intro from Carol, aren't you, during the next month? Yeah, so right. Carol will tell you a bit more about that side of things and in terms of the appetite of the investors that she works with. There are other business angel groups in Wales, but they're not as active. So people like Global Welsh, they have some high net worth individuals that are part of their network. So it's worth checking out Global Welsh, maybe on Twitter or LinkedIn. There's a group called Seven Seed Finance, Seven as in the river, Seven Seed Finance. Again, a group of high net worth individuals, typically investing into tech businesses, I think. But there's also some under the radar investors, as I call them. So people like Henry Engelhardt, they're wealthy individuals in Wales who have done well and want to give back to startup and early stage businesses, but don't do so with a group, they just do so individually. So those under the radar investors are quite hard to find and pin down, but they are out there and they're eager to support entrepreneurs in Wales, which is fantastic. In terms of other early stage equity options, so there's seed funds and early stage funds to consider. So the most prominent early stage investor in Wales is the Development Bank of Wales. So they have an early stage tech team. They're the most active equity investor in Wales. So if you do have a business, in that tech space, it's really worth hooking up with the Development Bank of Wales to see what their appetite is. And often Dev Bank do invest alongside other investors, so they always, or not always, they often look for co-investment. So they invest with the likes of Blackfinch Ventures, which is over in Gloucester, Wealth Club are another equity investment group to consider, they're in Bristol, and 1818 VC also are looking to do early stage equity investments into Welsh businesses. So they're the backers of people like Wealthify, TOTM and MyPinpad. So they've backed some quite interesting Welsh businesses with their equity. So it's worth checking out 1818 as well. One of the British Business Bank's programs is called the Regional Angels Programme, and this is trying to encourage investors in London to invest equity, early stage equity outside of the M25. So people like SFC Capital and Newable are both funds who are looking for early stage equity opportunities in Wales. SFC Capital have supported Transcend Packaging, a Welsh business up in Caerphilly, and Newable have recently invested in Space Forge, a space tech business in Cardiff. So, these organisations are actively seeking really exciting early stage equity opportunities. So it's worth checking out whether they have maybe pitch events or they're maybe calling for investment opportunities to come forward. So worth checking out those organisations. But there's various other early stage equity funds, and often they look for investments in certain geographies or certain sectors. And there's some even that target businesses with female led businesses, so female founders, so people like Ada Ventures, Angel Academ, they are funds who want to support female entrepreneurs. So whatever you're looking for in terms of an equity investment, maybe we could touch base separately, and if you want some guidance in terms of which funds to approach, then I'm more than happy to have a separate conversation on that. But it's worth checking out their website in the first instance just to get a feel for their appetite. So that's early stage equity. Then you may have heard of a term called venture capital. Venture capital firms invest in early stage companies, usually after seed or business angel funding round. So you will have maybe heard of seed investment and then Series A investment. So VC would tend to invest at that sort of growth stage up to Series A type of stage. They can either be generalist or specialist funds, typically invest between 750 and 5 million and often co-invest. They do look for some traction. So the business would be slightly later stage, probably achieving some early revenues or proof of imminent revenue. And they should have the option to scale quite quickly and provide an exit route within 3 to 5 years. They usually take quite a significant majority stake in the business, and they would take a seat at your board as well, but hopefully adding value in terms of guiding the business growth and its strategy. So that's VC. And again, there's various venture capital funds to consider, some of whom I mentioned on the previous slides, but different VCs look for different types of sectors and different levels of funding as well. So some are more comfortable at the lower end and some will invest more money. So I can happily suggest some VCs if that's the avenue that you'd like to go down. Then the other term to mention there is the private equity. So I'm not going to go into too much detail on that because I'm assuming, I don't know if people are at that stage yet. Happy to cover it in more detail if you are. So private equity is similar to VC, but at later stage again, typically in more profitable businesses. So you've gone beyond the sort of seed stage, growth stage, Series A, and you're growing beyond that. You would then look to approach a private equity firm to secure that equity investment. So I won't go into a huge amount of detail on that. If we go to the next slide, I'm just going to pause for breath because I don't want you to get too bored. And if there are any questions, then please do shout at this stage. If there's any points of clarity, or if you would like me to cover any of that in a bit more detail, or if you want me to sort of focus on a different type of funding, please do say.
Can I ask a question, if that's okay?
Yeah.
So to what, obviously with your British Business Bank hat on, to what extent can, I suppose the businesses on the call and other businesses across the Accelerator Growth Programme, how can they connect with the British Business Bank in order to sort of, I suppose, keep appraised of the latest developments and any potential funds that may be coming online, etc., in the next couple of months, years, etc.?
Yeah, good question. So I was going to touch upon this at the end if we had time. So basically, I'm the only person who represents the BBB in Wales. So if people want to connect with me, I've put my email address on the final slide. So more than happy to connect up with you. I've got a pretty good understanding of the funding landscape in Wales. So if I can't point you in the direction that you want to go in, then more than happy to introduce you to others within the ecosystem who hopefully will be able to help. But there are resources and funds that BBB do have that could be really beneficial for you as companies. There's also resources like our Finance Hub, and I'm happy to post in the chat actually, if that's actually, I'll do that now. So the Finance Hub is a really useful tool where you can navigate through, you know, you can say what level of funding you need, what sector you're in, and what geography you're based in. And it'll give you some options there in terms of which sources of funding to approach. There's also things like the education through the Open University. That's quite useful. There's some courses there that could be really beneficial for you guys. But also on the supply side. So I mentioned our startup loan program. That could be really beneficial for some of you if you're at that stage. And the Regional Angels program, where they've started to make an impact in Wales. Those types of things will just evolve all the time. There'll be more investors looking to invest in Wales all the time. So I'm happy to keep you appraised of that situation. But the other thing to mention is that we've been asked recently, actually, by Treasury to roll out a new fund for Wales. So we've been asked to deploy 1.3 million to Wales specifically. So we will be bringing that new fund to market probably in the next year or so. And that will be debt and equity funding. So that's, you know, one to watch really in terms of another source of funding that you can approach. So as things evolve with that fund, more than happy to come back and give you some more information on that. But it's quite interesting to see that there's a new fund alongside the Development Bank of Wales that will be really hopefully making an impact to support startup and scale up businesses. Another fund to keep an eye on actually is the Cardiff Capital Region Fund. So they've just launched a procurement exercise for an innovation fund. That should be live, I would imagine, within the next 6 months. So I think they'll be investing equity of larger check sizes, so probably sort of 2, 3, 4 million pounds. So if you're looking to secure that level of funding, then the Cardiff Capital Region Innovation Fund is one to watch as well. So really, Siwan, in terms of engagement, I think it's, you know, keep checking maybe on our LinkedIn page. We try to share as much information as possible through our LinkedIn page. So British Business Bank Wales. Feel free to connect with me on LinkedIn. I usually post about different education sessions and seminars and webinars that I'm organising. I'm more than happy to connect with you personally as well. A key part of my role, actually, just to mention, so I do a fair bit on the education side of things. So I run various webinars specifically for Wales, and I've got one coming up next week, actually, which may be of interest to you. So it's the BBB partnering with the Scale Up Institute, and it's specifically looking at scale up capital for businesses in Wales. So if you are scaling in Wales and wanting to know, you know, how the landscape looks, we've got contributions from DevBank, Innovate UK, London Stock Exchange, BBB, and then some businesses from Wales as well, talking about their scaling journey. So we've got a fintech business called Sonovate and also Transcend Packaging, who will be coming on and just sharing their experience in terms of how they overcame challenges, how they raised different pots of funding. So it may be of interest to some of you on the call today, and I'll share the link to that later. So hopefully that's a quick whistle stop tour. Is that okay, Siwan?
Yeah, that's perfect. Thank you. Thank you.
That's okay. Okay, we'll go on then, unless anybody has any questions. So I was going to just touch upon investor-ready documentation. I won't spend a huge amount of time on this because I'm sure you've covered this on your AGP course previously. So those are the 3 key documents: an exec summary of the business, maybe a 1 or 2 pages summarizing those key elements of the business. The pitch deck is really important. So if you're looking to go out to raise equity investment from an external provider, you will have sort of a, I don't know, 10 to 12 page pitch deck, again, summarizing the key highlights of the business. And then you'll probably have a more robust, more comprehensive business plan, including those forecasts that you've had help with from your accountant. So those are the key documents. Siwan, just to gauge, have you gone through within AGP, you know, what should be covered within those documents. Do I need to run through that, or have you done that?
We haven't yet. No, we haven't yet. Obviously, we've got Carol's session coming up, but around investor readiness, but no, not yet. No.
Okay.
Carry on. Yeah. So
if you go to the next slide. Sorry, I'm just looking. David, you're right, 130 million. You are right. What did I say? Did I say something different to that? But it is 130 million. You're right. Yeah, so that was the Treasury announcement for Wales. He also announced some funds for the other devolved nations as well. So watch this space on that. More details to follow. Okay, so in terms of those 3 key documents, this is the type of information that you should include. I won't go through in a huge amount of detail. It's very common sense. So you do need to touch upon who you are, what's your product, what problem are you solving, how is your product or service different to what's already in the market. Talk through your market and competitors. You know, these terms such as SOM and SAM, you know, I'm sure you've heard these been spoken about through your education sessions at the AGP already. Make sure you highlight who your competitors are, but importantly, how you're different to them, what your unique selling point is. Go into detail around your route to market. How are you selling your customer? How are you selling to your customers? How are you generating revenue? Is it through distributors? Is it direct to customers through your website? You know, make sure that you've got some good detail around that. Make sure you talk about your pricing model. I've seen lots of pitch decks that haven't gone into that detail in terms of how are you actually going to generate your revenue. You know, what is your business model? Make sure you talk about the team and the advisors, who are the key people. And then go into some detail around what traction you've achieved to date. And you may not be revenue generating yet, but in terms of tech development maybe, or if you've won awards, or if you've secured some grant funding, make sure that you detail the traction that you've achieved to get to that stage. And then make sure you cover the financials. Very often businesses skim over this, maybe aren't in a position to provide enough detail, but make sure you give plenty of detail around what the numbers are going to look like, how you're going to achieve your growth, and what the assumptions are between that growth as well. And then talking about the investment offer. So if you're looking to raise 300,000, make sure you detail what that investment will allow you to achieve and what that growth trajectory looks like, what your key KPIs will be, and what an exit strategy will look like for the investor as well in 3 to 5 years' time. So that's just sort of very high level. I won't go into too much detail on that, but happy to answer any questions. And then I just wanted to touch upon the investor dynamic. So what do investors look for? And I think it's often quite misleading. I think sometimes businesses think that maybe an investor just wants a return on investment, and that's not necessarily the case. So we did some research when I was at GT actually with lots of different EIS funds and early stage funds and VCs, just to really try to understand what were the top 3 things that they looked for when they were evaluating a investment opportunity. And actually the first thing is management. You know, you as founders are really, really important when it comes to an investor looking to back the company. You know, they're really looking for a chief exec with significant experience. They're looking for that entrepreneurial attitude. They want you to have that strategic vision. They want you to be hands-on and committed and incentivized, but also you may have an independent board or some advisors around you to support you. You know, if you acknowledge that there are some gaps potentially in your background or experience, then you can have people around you to support you with that. But, you know, management is a really important dynamic when it comes to investors looking to invest in your business. So make sure actually when you're pitching for investment that that is really at the forefront of your minds. They want to get to know you. They want to understand your background and your experience, but also, you know, what drives you and what vision you have for the business. So don't underestimate how important you are to that presentation. And then obviously, you know, the business as a whole in terms of the investment opportunity is really important. They will be looking for a high return. If you're a tech business, they really are seeking that high return. They're looking for that scalability. They're looking for protection around your IP. They want to really understand when you will reach break even and how long that'll take and what needs to happen to allow that moment to happen in the not too distant future. They want you to consider how you've protected your risk. So if there are risks involved with your growth strategy, then managing that risk is really important and identifying those risks. And also they want you to consider that exit strategy. So again, as an equity investor, they are looking for that exit further down the line. So just giving some thought, you don't have to have concrete vision on what that exit looks like, but just giving it some thought so that there are options. And one good idea is just to look at I don't know, well, maybe the crowdfunding sites actually, or looking at press and looking at Crunchbase, looking at examples of maybe others within your industry, looking at their valuations, looking how they've exited, just so you can share some examples of who could potentially maybe support that exit strategy in the future. And third most important thing is the deal. So are you ready for investment? Is the tax relief there in terms of that SEIS and EIS that I mentioned earlier? Is your valuation realistic? And what does the shareholder structure look like? So all of those things make up the deal as a package for an investor. Valuation is something that often comes up, and I think it's an area for a whole other education session, not for today, but just be really careful on how you value your business, because that is a key negotiation point when you are raising external equity finance. And then just flicking on to the next screen, I'm just looking at my slides here. So in terms of making an impact when you pitch. So one thing that I think is quite useful, and you've probably done this already, but practicing your one-liner to explain what your business is really effective. So if you can nail that one-liner, first impressions really, really matter. You want to make an impact when you're meeting an investor. So practicing that one sentence, having that really effective introduction to explain what the business is it's usually the hardest thing to get right, I think, but it can really make an impact when trying to create that first impression. And then beyond that, practicing your elevator pitch. So how would you summarize your business in 1 to 2 minutes? Again, try and nail that. Those are two quite useful exercises to make a good impression when you're meeting your investors. And then I'm wondering if I've skipped a slide. Oh, common mistakes. Okay, let me just click on that then. Sorry, I've lost my, okay, common mistakes, sorry. So we did some research on this with our VC community as well. And it's just quite interesting to really understand where businesses go wrong when they're looking to raise investment and pitch for funding. And those are some common mistakes there up on the screen that we regularly hear from investors. So very often founders will just talk about the idea, they'll just go into depth, 10 minutes talking about the product or service. And sometimes the investors want to know more than that. They want to know about the team, they want to know about the exit strategy, they want to know about the growth plan, they want to know in detail about the financials. So make sure that you just don't focus purely on the concept and the product or service. My second point is the same one, really. So too much time on product or service. Thirdly, not enough focus on the team. So make sure that you really build that up in your pitch presentation so that you are really demonstrating the value that your team is bringing to the table. Also, some founders only see it from one side of the table. Make sure this is a win-win situation. So what's in it for the investor? Maybe try to give them a flavour for why they would want to invest in your business. What does their return on investment look like? What does the future growth look like? Because this is a two-way street. It needs to be a win-win situation. And very often I hear about financial errors. So there's often errors in projections. So if your forecasts are incorrect or you can't explain them fully, just be careful of that. You're not expected to be experts in every single aspect of your business, but just have a good feel for what your forecasts are telling you so that if you are challenged on it, that you're not picked up on basic mistakes. So that's just a good feel, really, for why some propositions are not taken forward by investors and some of the common mistakes that do happen. Next slide, please, Siobhan. So as I mentioned before, this needs to be a win-win situation. So what do you need to look for in an investor? Really, you want a long-term partner. So can you work with them, day in, day out? Are they a cultural fit to your business? Especially if you're looking to raise investment from a business angel. If you've got one individual sitting on your board, you need to be able to get along with them. You need to be able to fit them in with the organisation and make sure that they really do add value along the way. So make sure that they are a long-term partner that you are happy to have as part of your team. Also consider if they're a patient investor, and by that I mean, are they willing to be patient and stay with you for the long term? As we all know, it can sometimes take quite a long time to get a business up on its feet. It can sometimes take a while to generate enough revenue and become profitable. So you want an investor who can stick with you, follow on their investment as well. You want them to, if they give you £200,000 now as seed investment, do they have appetite to invest in 2 years' time when you're looking for growth funding? So make sure that they are a patient investor. Again, understand their attitude to follow on finance I've just touched upon. Also understand their portfolio. So they may have invested in similar businesses before, and that can be a good thing, can be a negative thing, but make sure that you understand who they've supported in the past. So as I mentioned with that VC called 1818, they have some fintech businesses in their portfolio, but also other businesses from other sectors. So if you understand who their portfolio is, you can really try to get a feel for whether you fit within that portfolio. And try to understand what connections they have and what value they can bring. So what sector expertise do they have? Can they make relevant introductions? So yeah, it's worth considering what value they can bring and what networks they can open up for you as a growing business. So that's the other thing to consider, really. So we're nearly coming towards the end, and I hope that's been useful. Please, if there are questions, pop them in the chat box. Just a few final points, really. So firstly, raising money does usually take longer than you anticipate. You won't get money just because you need to. Bootstrap if you can, self-fund if you can, but when you do look to raise that external finance, make sure that you are ready with all of your documentation and your forecasts. And please do reach out if you need guidance from anyone within your AGP network or further beyond, including myself. If we can help in terms of sourcing funding for you, then please do take on that external advice as well. When you're pitching for investment, be aware of your audience. This isn't a sales pitch. When you're pitching for investment, you're not selling to a customer. Make sure it's a win-win situation. Why would the investor want to invest into your business? So make sure that that's clear when you are pitching. And really, finally, be clear on what you're asking for. So what outcome are you hoping to achieve from that pitch? Have you identified certain types of finance, level of finance? What will it help you achieve? Or maybe you want some expertise as well. Make sure that you are very clear when you're pitching, that that ask is also clear. And just really plan and practice your pitch and be confident. You guys know your businesses through and through. There's nobody that knows these businesses better than you. You've lived and breathed these businesses day in, day out for the past few years, I'd imagine. So be confident. You know absolutely everything there is to know about the business. So just go for it, and wishing you every luck with your fundraise. If there's any questions, I'm more than happy to cover them.
Thank you, Beth. Yeah, that was amazing.
And I think on the final slide, Siobhan, there's my email address if anybody did want to pick up on anything.
Are we okay to share these slides?
I'll probably tweak them. I need to, if they should be branded, Siobhan, this is my fault, they should be branded by BBB. So leave them with me and I'll circulate them as soon as I've added the branding on, if that's okay. Fab, thank you.
Yeah, absolutely, that would be fantastic. Because I know that there's some people who potentially joined the call that probably would, and unfortunately had to leave.
Okay.
So they would love to get this recording plus the slides, if that's possible. That would be great.
Yeah, no problem at all. That's fine.
Marvellous. Okay.
So there's one question in the chat box. Sorry, I'm just looking now. So from Andrew, where can businesses get best independent advice, unbiased, and from a source that fully understands the landscape at that point in time? That's a tricky one, really. I mean, I think, I don't know, Sean, about the relationship managers within AGP. Would they be the best port of call in terms of that independent advice? What do you think from an AGP point of view?
I think it would be difficult for, I don't know, I think it would probably be down to sort of potentially, I would see people like you as potential sort of ecosystem, sort of, I suppose, what would you call it, stakeholders, as having that hybrid viewpoint around sort of the various different. So the intention of Funding February is to almost expose the AGP businesses to those very people like yourself, Carol, the team at DBW, who I suppose have it in their best interest to remain relatively independent, I suppose, you know. It's just a difficult one, really, isn't it? Because even the most independent aren't independent, because they're probably a broker for some form of sort of VC or it's a difficult one, really.
It is tricky, but you know, I'm always impartial. Obviously, I do talk about the BBB pots of monies, but I'm also always signposting to different sources of funding. So I can, you know, more than happily help if that's of interest in terms of pointing you in the right direction. But as Siobhan said, you'll meet lots of different people over the next month, all of whom I think would be really useful connections. There's obviously independent advice out there that you can pay for. So it depends, you know, what route you want to go down, really. If you're looking to raise funding and need support in terms of corporate finance support, then there's people out there that can help you along the way. But obviously they'd need to be paid. So I would just get all the information you can from, you know, your relationship managers, the people from this my session and other sessions during the month, and just take all the advice that you can, really, and you know, make sure you connect with us on LinkedIn, and we can help in the future whenever you're ready to get that additional advice, really.
I think there's also something in sort of almost highlighting or identifying or sourcing another entrepreneur that's gone through a similar funding experience, because obviously that could be a complete and utter, I suppose, warts and all conversation where they could sort of ultimately talk about how they found the scenario of navigating the funding system, but equally making sure that they made the right decisions.
Yeah, definitely. I think that's really important. We try to use, well, I tried whenever I run education sessions, I try to use businesses from Wales who can really share that story and have some strong case studies, because I don't think there's anything more powerful than that, really, in terms of hearing from themselves, because they know how difficult it is. They know what you're going through as business founders. So for them to share their story is more valuable than anything, in my opinion.
Great, yeah. Thanks.
I was just going to share with you the link to the session I've got next week. I don't know if this link will work, but I'll try it anyway. So this is a session I'm running with Scale Up Institute, and there's 2 businesses from Wales talking there about their fundraising journey. So it may be interesting to some of you to attend that. If the link hasn't worked, Siobhan can send it around to you separately anyway. Yeah,
no problem. I can post it on the AGP LinkedIn group as well, if that
okay. Yeah, that sounds good. Fab, thank you, Andrew. That's great. Any other particular questions? I was just going to ask David. I know that you had a question further up. I just wanted to make sure that, I don't know if I addressed that. You were looking at specific, this innovation point. I don't know if David's still there. Was there anything specific you wanted to talk about innovation funding or anything like that? Or maybe if he's not there, Siobhan, if he has anything that he wants to follow up to discuss, I'm happy to have a chat with him. Okay, that's fab. I'm hoping that's useful, everybody.
Yeah, I couldn't get off mute then. Apologies, Beth. That link looks like it works as well. So
fab. Okay.
Excellent.
So yeah, hopefully that was useful, everyone. Good luck with the rest of your sessions this month, and any other questions, just reach out to me either on LinkedIn or email. Happy to help.
How long is next week's webinar on the Scale Up?
It's an hour and a half.
Hour and a half. Okay, great. That's excellent.
Yeah.
Okay, thank you, Beth. That's amazing. Thank you ever
No
so
worries.
much. And
No probs.
we'll see you all soon. Thank you, everybody, for attending.
Thanks,
Thank you,
everyone.
Beth.
Take care.
Bye.
Bye-bye.
Thank you.
Bye-bye.
Thanks.
Bye.